Welcome back. We continue our coverage of the big story of the morning, the LIC listing, listed at a slight discount to its issue price. We are just getting erudite broker reports, and the first one to hit our table is Macquarie Capital's report. They've initiated coverage on LIC with a neutral rating and a target price of 1,000 rupees. They believe that they will be able to scale up the non-par business, but it will not be very easy. It will be a challenge. Let me go to the author of the report who is joining me now, Suresh Ganapathy of Macquarie Capital. Thank you very much, Suresh, for joining us. Well, neutral is neither here nor there, so you're not asking people to sell when the price is perhaps 890 or 900 at this point in time. But what went into this, 1,000 rupees? How do you arrive at it?
Yeah, look, I think one has to look at the fact that the embedded value obviously is the biggest component of valuation for LIC, and new business value accretion to the overall value for LIC is actually pretty low, because the contribution of new business, that is the value of new business to the EV, is a very small number of about 1% or so for LIC, compared to say 9 to 10% for the private sector players. So what happens, Lata, is that when you give a multiple on this new business, it moves the valuation for the private sector players, but it doesn't move the valuation for LIC. So largely what happens here is that whatever is your embedded value forecast, which we forecast it to be roughly about 6 trillion rupees over the course of next 12 to 18 months, that effectively becomes your true measure of value. Okay. And on that, you can at least give one-time price to EV. That's how we're looking at it. And therefore, we arrived at the current target price of 1,000 rupees.
Okay. Now, henceforth, LIC has the advantage of not being a corporation under the government of India, where, you are put on election duty, you have to do Hindi propagation, all those jobs come along. Now you are a company. So there are a lot of advantages. I mean, we saw that transition happening in SBI for that matter. It was just synonymous with government of India and then became a fairly smart bank. You don't think that LIC can also experience that transition?
Takes time, Lata, because see, first of all, let's look at it in this way, that the company has largely sold one big product, which is power product, right? And the group business which LIC gets, it doesn't sweat for it. I mean, it automatically gets that, which is the ONGCs or all the PSUs, which actually land up giving the retail business to LIC. So LIC is not going to shy away from that business, right? So that is going to be 35% of your overall business mix, which is easy to get, and you of course make low margins on that. Now to suddenly change and ask your insurance agents to go and sell hardcore protection policies is not going to be an easy task. Plus, it's largely remained an agency force, right? So again, for example, the DRHP or the RSP talks about scaling up of the bank assurance channel and stuff. But the point, Lata, here is that the four largest banks are not your bank assurance partners, right? Which is HDFC, ICICI, and SBI and BOB. So, I mean, it becomes very difficult to scale up even the non-agency channels, and therefore one has to take a very guarded view on their ability to scale up the non-par book at this point in time.
LIC agents are well regarded. I mean, they're smart guys. You don't think it will be possible for them to sell, non-par products, say a pure term product or a large pure term product to their existing clientele?
They could even sell today, no? What prevented them from doing that? My point here is that largely these agents have always sold LIC policies as an investment product and not as a pure protection product, right? So suddenly to go and say that now you're going to get, XYZ, I mean, your wife may land up getting, or a spouse may land up getting money if you die. I mean, I don't really think it works that well, because as I said, you have largely sold it as an investment product, point number one. And secondly, it's a large bureaucratic organization to change the incentive mechanisms and make the agents do something which they've not done for 60 years, have a profitability focused, and then drive the business in that direction is not going to be an easy task. And finally, the proof of the pudding is in its eating, right? In FY22, LIC's product mix has not even changed even a bit. On the contrary, they have lost further market share in FY22. In an IPO year, when you're gearing up for an IPO, you would expect you to do well in the individual business, but individual business has lost market share from 40% to 37%. So nothing has actually happened on the ground going by what has happened in FY22.
Okay, let us assume we give them benefit of doubt because it's a COVID year and it's not very easy to retrain people at short notice. Giving them benefit of doubt, do you think that in coming years the agents will be able to sell more individual products? And as you say, non-par products, pure term products. Is that possible? Or when I read your report, it looks like their bigger problem is that their ticket size itself is small.
Yeah.
Looks like they're catering to a lower middle class or a middle class and
Yeah.
have not hit it off with the real wealthy guys.
Yeah, so that's right. Lathan, having said that, it's not that we are underestimating LIC's distribution capabilities. Of course, it is quite unparalleled, and we have factored in a 30% growth in the non-par book over the course of next 4 to 5 years. So we have given them plenty of benefit of doubt. We have also increased the margin estimates from the current 10% of the report, the VNB margin going up all the way to 16, 17%, share of non-par going from 6% to 13% in the next 4 to 5 years. So we have given all that benefit of doubt flowing into LIC. But as you rightly pointed out, the ticket sizes is 1/5 of that of the private sector. And obviously, a lot of policies do get. So if the ticket size for a private sector is 75,000, and particularly if I want to take HDFC Life, which does a pretty good job in the non-par savings product segment, which is the guaranteed return product, right, which gives you good IRR. The ticket size is about 100,000 to 120,000, and LIC's ticket size on an average over the entire product structure is 15,000. So the target segment is different, not easy to sell these kind of policies to these segments, requires a lot of effort and stuff. So therefore, I do believe it becomes a bit challenging for LIC to scale, considering the target segment also that they cater to.
No, I agree. Perception is an issue. High net worth individuals usually migrate to the private banks and therefore perhaps to the private insurers as well. How about tweaking of the commission structure? How is it now, and will tweaking it help push non-par products?
Yeah, a good question, Lata. If you were to really look at the pure protection product, even today, for example, the commissions that an agent could get in a pure protection product is actually higher than a savings product, right? So one could always argue that the commission structure was very well aware to the agents, and the agents, if they had sold more protection product, would have always got more commissions from LIC for that matter compared to the par product that they were selling. So in that sense, nothing prevented them from doing that. They never did it much. They always sold power products. So to that extent, obviously, one can't now argue that because you have got listed, now you will sell more protection products, because the commission structure anyways was known to the agents that was more lucrative. Now, an interesting point is within the savings product, which is par, non-par, and ULIPs, the maximum commission structure is defined by the IRDA is same. So the IRDA doesn't distinguish that, right? So the maximum commission that you can get on a par product is 35% in first year, same as the non-par product. Okay. So nothing changes. Now will LIC say that I will only pay you 15% commission on a par product, and now I will pay you 30% commission on a non-par product, and therefore agents will go and sell a non-par product more? Can they do theoretically? The answer is yes. Will they do practically? The answer is no, Lata. I mean, your agents have sold par products for 60 years of your existence. Suddenly, now you'll say, no, I'll give you lower commission and now let non-par be sold more. It's not going to work that way, right?
Yeah. No, I agree with you. It's not easy to make an elephant dance, as the cliche goes. But I take heart from the fact that SBI is such a smart bank. I mean, with their YONO and they're able to access higher levels, perhaps. We'll have to see whether LIC can do that. What will make you change your view? Say, 1 year down the line, if you're having this conversation.
Yeah, the critical point here is that because this is a 60-year-old organization where you have formed the EV by transferring a substantial proportion of equity gains to the EV book. So what is exactly happening here is the call on LIC essentially very significantly depends upon a call on markets or an ETF, because at the end of the day, if you look at it, if the equity prices fall down by 10%, the EV goes down by 7%. So the new business accretion to the overall value is very small. And that's what we have been arguing, that even if I were to take a very liberal assumption of, say, an 18-20% VNB growth for the next 15 years, take a 20-25 times multiple on that, we still end up getting maximum 15-20% further upside from current levels. So really the EV is the biggest driver of valuation. That in turn, unfortunately, is completely dependent upon markets. Okay. So it is going to be highly volatile, market dependent stock at this point in time.
Okay, then in that case, I guess policyholders and retailers who have applied have the consolation that they're at least applying for LIC when the market is not at its highs, is way off its highs. And so...
Yeah, but the EV is at its high.
Yeah,
so if the equity markets were to, if I have to factor FY23's 10% correction in equity markets, I have to cut down EV by 7% by
I hope
LIC.
not. I hope not. We've already corrected 10%. Just finally, market may be the best friend of LIC. So if the market bottoms out at whatever, 15,000 or 15,500, then perhaps LIC becomes your ally. It is also very likely that it will get into the Nifty, Sensex, several other indexes. I don't know about the MSCI. Perhaps it can't get into MSCI because there could be a float issue. I don't know. But you tell me whether the market can befriend LIC and take it higher.
I think, let me put it this way, that typically businesses which are heavily dependent upon markets tend to trade at a discount, Lata.
Okay.
So clearly, I don't think it is going to be a one.
No, but have you factored in your pricing the fact that it would get into Nifty and Sensex and other?
No, not at all. First of all, anyways, it needs to have 6 months of track record, and then it has to be in FNO, and then before that only it can get included in the index, right? So it's quite a time away. Even if for it to, first of all, MSCI has a minimum criteria of $2 or $3 billion. I can't recollect the exact number, but so it's way off from that in that free float criteria, and unless the market cap goes up, and Nifty inclusion also will take some time.
Okay, so immediately we cannot count our chickens. They aren't about to hatch. Thank you very much, Suresh Ganapathy, for explaining it in more lay terms, what may hold back the progress of this giant. Of course, things are dynamic and people can change, but at the moment, that's the valuation that Macquarie is giving, 1 time to the EV embedded value, and therefore, the price is 1,000 rupees neutral rating. We'll wrap up on this edition of Trading Hour on that note and request you to stay on because halftime report is up next. You're going to get the WPI numbers, very important for the markets, and you will get to hear the LIC chairman. Stay tuned.